Welcome back to the video. For this video, I'm going to share what I did for this morning New York AM session. Sort of like a journal for me as well, and to reinforce the idea that my model is working perfectly fine. It's more like a moral support for myself as well. So let's dive into this. Now over here on NASDAQ, let me just pull out the trade journal. the calendar. So yesterday, if you have watched my live stream, I took a long initially and it was stopped out, and because for top step I gave myself a 1 trade per day lockout, so I couldn't recover on the second setup for top step, so I just have to take that losing trade and end the day. Today, even though it says 2 trades, but it's actually 1 trade, but with 2 contracts with different entries. Heading over to the charts. Now this is where I shorted. I was not expecting to be shorting at the high of this huge expansion lower. It's almost a 200 point move. I don't know, I think it's more than 200 point move. So I wasn't expecting that, but anyways, I was just looking for a bread and butter 2R setup. So right here you can see that my entry is within this inversion. This was the first entry at the low of the inversion. The second entry was somewhere around here. I think it's right at it's slightly above, 1 tick above the consequent encroachment of the inversion fair value gap. And the reason why I shorted that candle is because we are trading all the way to the high of the inversion, which means, if I'm correct, price is going to move aggressively away from my inversion in the next few candles. That is how the model should work. And I have my mouse on the flatten all button. Once it closes above the inversion, I'll be out. Body candle, the candle body, if I see a candle body closing above the inversion, I will flatten all the position. So that is the very aggressive stop loss management that is available if I am trading the OTE model. So right here, from this high to this low right here, notice how the inversion fair value gap is within the OTE range. So that was the consideration that I have. And after we engulf this up close candle, forming a swing high on 15 seconds, I trailed my stops from here to this candle's high, and I just wait for the move to end at 0.15, which is 25245.25. right here, the exit 25245.25. Not sure why it's at this candle, because it's clearly this candle that ran into the 0.15 level. Maybe that's a glitch in the printing of the price. Right, the reason why I took this short over here is because if we take a look at ES on the 1 hour time frame, right, notice at that point in time, ES did not or has not take out this low right here. This low is a previous day's low. It is also a daily fair value gap. And right after midnight, which is this candle right here, we printed a swing high. We took out that swing high and we started to displace lower. My initial bias for the game plan or for the analysis of Wednesday is that I'm bullish, but for me to be bullish, or for me to start to look for any long setups, I need to see price take out the swing low after midnight. So instead of doing that, taking out the swing low first, it took out swing high first. So that pretty much indicates that we're probably going to expand lower into the previous day's low, which is further supported or reinforced by the bearish order flow that followed after this stop hunt right here. So you can see that price is respecting this up close candle. It is also a bearish order block. Look at the wicks right here. And then we started to displace lower. Now if we drop into the 5 minutes, sorry, let me just mark the previous day's low for Nasdaq, and then we can drop down into the 5 minutes. So when we drop into the 5 minutes, you can see that Nasdaq right at 9:30, it dropped straight away into the previous day's low. Yes, even though it dropped as well, it did not reach for the previous day's low. And yes, you could have argued that this might be a possible daily SSMT, but in order for the daily SSMT to be confirmed, we need a change in the state of delivery, or at least a market structure shift on the 5 minutes, which we clearly do not see that on ES. We only saw that on NQ at 9:45. Sorry, not 9:45, but 9:50 candle. So when we have a higher low candle that is unable to market structure shift or CISD, then that signals a crack in correlation, as the one with strength should be the one that takes out or form the CISD first. But instead we have Nasdaq forming the CISD first. So in this case, I was thinking, okay, it seems like this is probably going to be a fake out, like a turtle soup. And how or what do I look for to confirm that turtle soup? Alright, because I do understand that ES is not breaking higher, therefore it's probably going to continue to go lower, looking for the daily low of yesterday. So for that, the bias for the AM session is pretty much established. So once I am bearish on the AM session, I started to look for swing high to form on the 5 minutes. So once we take out this high, the only thing left for price to do is to form a swing high on the 5 minutes, because every expansion always starts off with a swing high or swing low. So once we took out this high, we formed this candle right here. I waited for this candle's very last minute before I key in the orders. So if you mark this candle, which is at 10 a.m. and then you go down into the 1 minute, because I waited for the last minute. Okay, this is the swing high that I was looking to see it not trade to. Okay, so we have this candle right here. This is 9:59. When 9:59 closed, we closed down here. So the possibility of us taking out this high with a 1 minute candle up here is very low. The possibility is very low, which is why after this candle's close, I key in my orders on the 15 seconds time frame which is also within this order block right here. Okay, and then just so coincidentally, this candle is the 10 a.m. candle. So obviously, if I'm shorting above the 10 a.m.'s opening price, I would be technically trading the power of 3 on the 1 hour candle. Make sense? So somehow or other, I just managed to catch the high of the hourly candle, which led to the expansion down into the initial low that was formed at 9:35. Alright, so just to take another look at the entry before I end this video. So because this candle right here is the 10 a.m.'s open, I place the orders right here, and as price is trading up higher, it tagged my first order and then it started to close up the gap. Alright, it started to close up the gap. That is when I entered the second contract market order in, because I didn't have a limit. The risk itself is not very high because this particular setup here for the initial entry is only 14 points. One E-mini is going to cost me 280. Even if I were to enter the same level for the second contract, it's going to be 280 times 2, that's going to be 560. So it's still quite reasonable. And also, because of the strict requirement I had for this inversion to be respected, I have the option of closing out the trade prematurely if I deemed it as low probability, which is if we have a candle body closing above the fair value gap, the inversion fair value gap. So in that case, I would be technically risking only about 6 points from here. So 6 times 20, that's about 120. Adding the second contract, that is about 175. So I risk about 175 to maybe, if you round it up due to the volatility, maybe 200, or if you want to push it to 250, right? I'm risking 250 for a potential trade of 1,250, right? Just round it up. So I think it's a reasonable risk to reward that I was willing to take. Alright, that's it for this review here. Hope you enjoyed this, and I'll talk to you again.